Hey guys, it's Chris. Welcome back to my channel. In today's video, I'm very excited to bring you one of my favorite times of the year. That is when SE reports their quarterly results. So we have to discuss all the numbers, broken down, easy to understand, and to once again recap why this is my favorite stock in the entire stock market. If you asked me to sell every single stock in my portfolio, I would say, okay, sure, except SE, all right? For those of you that don't know, this is one of the biggest opportunities out there, in my opinion, as far as any growth stock that you can buy with a huge potential over the next 5 to 10 years. This is a very similar opportunity, in my opinion, to investing in an Amazon or Alibaba or a Tencent 10, 15 years ago, right? This is very early innings. This is a company that operates in Southeast Asia and also in Latin America, and those two areas are regions where the internet economy is growing at an extremely faster rate than pretty much everywhere else in the entire world. And there are all kinds of statistics to back this up. Now, I like to say I'm the #1 fan of SE. I like to see someone else try to argue with that, at least on YouTube, right? I've been talking about this stock since the beginning of my channel, and I've been buying this stock since it was $40. It remains my largest position. I have 150 shares. And you know, I'm wearing my blue shirt even for this video, and also I just got my Singaporean friend, shout out to Noella, that is going to help me get one of those nice SE jerseys, because the CEO owns a local soccer team there called Lion City Sailors, and this is the only shirt that has C on it, so I just gotta get it. But anyway, that's besides the point. So with the breakdown here of Sea Limited's business, they are in 3 main categories. They have a gaming entertainment business that is primarily their flagship game, Free Fire. It's an original game by them. They have developed it into one of the biggest games in the entire world, at least on mobile devices. You could see here it was ranked #1 in Southeast Asia and Latin America. Their esports tournaments and media that they produce, as well as players making their own content, get millions and millions and millions of views. And there is so much rich engagement. The number of users has been increasing even after the pandemic, right? And now there's actually a bit of a lockdown again in Singapore specifically. But nonetheless, even despite when restrictions were eased and people went back out more, the engagement on Free Fire has been amazing, and the amount of revenue that they've been generating per user is also increasing. All right, so that particular side of their business produced about 1.1 billion in gross bookings. All right, due to accounting purposes, they cannot recognize all that revenue at one particular time, so some of that revenue may be recognized later down along the line. But generally speaking, if you do the math, their revenue from the gaming business is around, I believe, 900 million, and it produces an adjusted EBITDA of over 700 million. All right, so they're pretty much banking all the sales that they're getting. All right, there is, like, you know, it comes out because of you know, R&D and to upkeep the video game, obviously, and try to make it better, and also work with some partners. They've partnered with a lot of local celebrities. They partnered with anime that a lot of Asians, you know, admittedly like me, are into, and that also again drives engagement to the game. So everything is clicking for Free Fire. And lastly, if you look at some of the hard search data here, you could see that Free Fire is trending way higher than where it was last year. It's kept up at a very, very high level. A lot of people, more and more users, are playing this game. So naturally, I think the life cycle of this game is still going to last for several years. You can look at a lot of popular games out there, like League of Legends, for instance, Call of Duty. These are some very big name franchises that have lasted like a decade or more. So I think Free Fire definitely has what it takes. But on the flip side, you know, they also have part of their business that is just a third-party publisher of games that they get from Tencent, who, by the way, is a large shareholder in Sea Limited. And they also have another game studio within them that they acquired called Phoenix Labs. It's something that hopefully will create new original games for them, and maybe just one of them might become a hit like Free Fire again. But as good as their gaming business is, ultimately, what they're doing with all those profits from that business, because it is very profitable, is that they're funneling all of those profits into developing their e-commerce business. And this is, in my opinion, where the main opportunity is in Sea Limited. So They again operate primarily in Southeast Asia across many different countries, but they're also expanding into Latin America, specifically in Brazil and Mexico, as of the better half of 2021 here. And we can see that their results are paying off. They've gone from a company that barely produced any revenue in just a short amount of time ago. And just last year, Q1 2020, they did around $250 million in GAAP revenue. Now they're almost at $1 billion in GAAP revenue. So that is a huge multiplier that they've done. They almost multiplied their e-commerce revenue by 4 times in just 1 year. All right. You don't have to even be good at math to realize, wow, 4 and 1, that must be good. All right. So, give it some more time. I think Sea Limited will just expand their dominance across these regions, and their revenue can continue to multiply. Even if the gaming business slows down, I think the e-commerce business is not slowing down much anytime soon. You could see that this part of their business in particular is actually accelerated and has stayed at triple-digit growth for the past couple of years. So I'm very excited for this side of their business. You could see their GMV, the total amount of goods sold in their business. Everything looks very good here. When you look specifically at Mexico and Brazil, you could see here that just some basic investigative numbers here. You can see that their Mexico side of the business is still not as high as it could be, right? It's ranked 4 on the App Store. But where I'm really looking at here is Brazil. And something very interesting here is that in Brazil, SHOPEE is actually above the incumbent here, Mercado Libre, which has been around in South America for a longer time than Sea Limited, and that is where they primarily operate. I think that's a really good sign. And Latin America, I alluded to this earlier in the beginning of this video, the e-commerce growth there is going to be amazing. It's actually the fastest growing region according to this research report here. You can see that it's growing at an annual rate about 36% here. Generally speaking, whether it's Southeast Asia or Latin America, these are developing countries with rising incomes, and that means more money to spend online shopping for stuff. And as far as Google Trends data, obviously you could have guessed this is continuing to trend much higher compared to the same time last year. And finally, the third part of their business is going to be the digital financial services, and this is something that very much ties into their work in SHOPEE, because this part of their business is shaping up to be something of a PayPal or a Square, where it offers some easy checkout payment opportunities or options for these people. A lot of people don't even have very solid banking services in the countries that they live in. A lot of people actually have a smartphone, but they don't have a bank account, a checking account, a saving account. Right now, this side of their business is barely even monetized. So as they have more people sign up to use Sea Money, and right now there are close to 26 million users of this product, I think that they can eventually monetize it in a very significant way, charge fees, things like that. And if they do expand with that digital banking, right, and they have gone out and acquired some entities so that they can get a full banking license and get everything set up, I think that that is another opportunity for them to get more revenue and income. Okay, so these are 3 very good businesses to be in. You have e-commerce, you have gaming, and you have fintech. All these are secular growth trends that are expected to continue well out into the future. If you are a long-term investor, I think it's a pretty safe bet. These are areas that you want to be in. And to address quickly everything that's going on with growth stocks and inflation and things like that, eventually inflation is going to tail off. Value stocks are not going to go up forever. At the end of the day, if you go back to every bull cycle out there, growth is what leads the cycle. All right. Or I should say, not necessarily lead at the beginning, but by the end of it, certainly, it's what carries on that cycle and what gets the most outsized gains. And when you have the opportunity, as I said, to buy early Amazon or early Alibaba or early Tencent, a huge mega corporation, this is something that I believe you cannot pass up in your portfolio. And to close things off with looking at the valuation and my price targets, You can see here that at the end of trading today, it closed at around $228 per share at $118 billion in market cap. And it has a price to sales of around 22 right now, which is not that bad considering this is the top tier company in this space. It's the biggest company out there by market cap that I expect to continue to grow so rapidly. And it does within it have that extremely profitable gaming business that, people tend to over focus on SE's short-term losses. Everyone says, oh, they miss earnings. They've been missing earnings every single quarter. It doesn't matter because when you have a company within, or I should say, subsidiary that's growing at 250%, targeting world domination here, I couldn't care less about short-term losses for this company. It's not like they, if they wanted to, they could turn on the profit anytime. The point is, when you look 5 years from now, 10 years from now, what is going to be the company that grew the most at this size? It's going to be SE in my personal opinion. I can't tell you what other stock it could be. You go back to the example with Amazon. Amazon was a cash burning machine for the good part of around 10, 20 years even. It just recently started to become very profitable. Every single year, the whole point, as just Jeff Bezos said all along, is not about short-term profits. It's about world domination, market share, and multiplying that revenue and getting those customers into that ecosystem and stay there and stuck. And everyone cannot live without Amazon. This is what C Limited is also trying to do. All right. And you can see with Amazon, it has had, 30% plus growth for the last 10, 20 years. So it's not like C Limited is going to slow down anytime soon, in my opinion. Again, you look at those growth trends in Southeast Asia, Latin America, it's not stopping anytime soon. So this in itself is a reason to own the stock, regardless of valuation. But if we really look at valuation, this is cheaper than Shopify, for example. This is cheaper than TTD, for example, on a sales basis in both of those companies. And I think that if you give C Limited a 25 sales multiple with the sales that it has right now trailing $5.4 billion, that gets you to around a $260 price target in the short term, in my opinion. But looking out for the rest of 2021, I believe they will hit at least $9 billion in revenue. That's what they've implied with their guidance that they issued last quarter. If you do believe in that, I think this can easily hit a $350 to $400 price target by the end of 2021. But again, such a short-term price target does not matter too much to me. I plan to hold this until it's 1,000 per share. And again, I've broken down how you get to this. But ultimately, if this company does around 100% growth and 50% growth next year, and then trails off to 30% the following couple of years, you will get to a $1,000 share price. But that's just me. I'd like to hear your thoughts and comments down below. And if you own C Baby and you're just as excited and such a huge believer in this company, and if you're new to this stock, I hope you got a lot of value and insight into this, and maybe you will consider investing. And hopefully by the next time I see you guys and talk about SE, I will have my beautiful shirt here and I'm wearing it, and it's going to be awesome. Until next time, my friends, stay well and invest responsibly.